This week, we are looking at debt. We are going to look at foreclosures and bankruptcy. They are all in chapter 8 of our text. Then we will proceed to chapter 9, which deal with the tax management. Both we will briefly look at both individual income tax as well as corporate tax. Then on chapter 10, we will look at insurance. Why is it relevant? Why is it important to insure ourselves or insure our property? Even the health insurance, life insurance, we're going to briefly go over them. But let's proceed on debt. Let's proceed on debt. Why debt is important? Why do we have to borrow? Why do business have to borrow? The simple concept is resources are limited. Resources are limited. So we borrow against our future earnings. I'm going to repeat that. We borrow against our future earnings. That the lenders, they will consider several factors before we can qualify for loan. Today, many of you are familiar with car loan, mortgages, many of you are not familiar to the idea that it is also good to borrow to invest. Most of us are only familiar with borrowing student loan to go to school, mortgages to buy property, whether rental or residential. Then we borrow for car notes. There are a lot of things that we can borrow for. The concept of borrowing, you as an individual, you have to do your math. You have to strategically plan. I'm going to re-emphasize that there's nothing bad in borrowing to invest, as long as the return, the benefit of that investment will outweigh the cost of borrowing. What do I mean by that? The gain on investment must be higher than the interest you will be paying on the loan. The moment you are able to determine the expected rate of returns, say like is 10%, and the cost of the loan, the interest you will be paying on the loan is like 4%, 5%, hey, go for it. It's as good as the mortgage that you take. We are all known, we are all sure and guarantee that the moment 5 years down the road after we purchase our home or properties, that the value of property will increase. Equity. We guarantee that. That's why most of us buy property. Otherwise, we will not buy. We are very smart that there's something in for it for us. Something in it for us. So if you are capable of borrowing $10,000 to invest on expected rate of return of 6%, and the cost of borrowing, the interest rate is like 3%, go for it. At the end of the day, you'll be better off. But what do you have to do? You have to do your own work. You have to. You can't miss it. The expected rate of return is guaranteed. The interest rate that you're going to be paying is also guaranteed. In that scenario, it's a win-win case for everyone, for the lender and for the borrower. It's also good for the community and the government, because when you invest, you have to pay tax on it. When you invest, there will be opportunity for job creation. That's why when we get to the capital gain, let me explain that now. If your regular income, you go to 9 to 5 job, Monday to Friday, that's cool. But you take part of your disposable income and you invest it somewhere, or you borrow and you invest it somewhere, the return, the periodical return, the gain you have on those passive investments are known as passive income. They are capital gain. The gain you realize on it, you pay a lower tax rate compared to the tax rate you pay on your regular income tax. Why is it so? Because government use that as incentive for the investor to reinvest their money. As they invest and the investment increases, so the opportunity for job creation. I hope we are on the same page. So borrowing money to go to school, to buy auto, to buy property, our home, or residential or rental, is good. But don't borrow money for certain things if you have not attained financial independence. I'm going to repeat that. Don't borrow money for luxury things. Financial independence means your regular income, you don't touch it. But the return on your passive income cover all your expenses. At the point where your passive income equal to your regular or periodical expenses, you have attained what is known as financial independence. I think I discussed that last 2 weeks or last week. People, do not borrow money for luxury goods. Yeah. Recreation vehicle, RV. Bike that you only ride during the summer. Don't borrow money for it. Don't borrow money to buy private jets. Don't borrow money to go to vacation. they did not yield any other thing other than leisure. I'm not saying leisure is not good, but you have to get to certain level, attain that financial independence first. Why? Because interest rate compounding before you know it, and that's why credit card is very dangerous. Credit card is very dangerous. Don't use credit card when you don't have the money. Too much debt is not good. That's why they do debt to equity ratio. When you have too much debt, all your disposable income will be going toward the interest rate, majority of it. And when you pay someone, you satisfying the interest rate all the time, what do you have left? Even if you have attained financial independence, you should be mindful of percentage of debt you're going to be acquiring. And when you attain financial independence, it means you have sufficient cash flow, especially from your regular income, disposable income. Every financial institution will want you. The moment you have like $5,000, $10,000 in a bank account without touching it, consistently for like 3 months, 6 months, you'll be getting a whole lot of call, a whole lot of mail will be sent to you. They want to do business. They want to offer you credit card, personal loan, this loan. What do you have to do? Ignore them. Because those are mere distraction that can get you into unnecessary debt. But when you have opportunity to take non-interest bearing loan, I'm going to repeat that. When opportunity arises for you to get non-interest bearing loan, that is some $0 interest rate. I think that happened during COVID and during the depression also, that the new car were being offered at 0%. Oh, take opportunity of that. I'm supposed to have changed my vehicle. I'm waiting for that opportunity should recession arise. But there are businesses with a lot huge cash flow like Amazon, Tesla, Apple, that they have huge cash flow. Whenever they want to implement capital projects, they go to this investment banking and take non-interest bearing. It's like their money is actually in the bank. It's like within our household, my daughter is keeping money with me, let's say $100 every week. And at the end of the year, where she has about $5,000, $6,000, she wants to borrow money like $2,000 from me in December. No problem, no interest. I'll be more than willing to give that $2,000 without thinking twice, because I know she has enough money with me. That's the relationship that happened between this multinational company and investment banking. They are the owner of the money that is sitting with investment bankers. So when they need a fraction of it, it's no problem. And strategically, when you bank with your community bank or credit union, you want to borrow money from them. You just need to be strategic. You know you're going to need like $200,000 in December, and you have $10,000 or $20,000 cash with a commercial bank. Go and take that money, put it in credit union. By December, when you need that money, you will get the best interest rate. They will be more than willing to give you any amount. But they will check that your expenses is not more than 35% of your income. The moment your expenses is more than 38%, they will dig further, look at your credit history, look at how you spend your income, how they will consider how long you have been on the job. But most important is debt. You should know how to control debt. Be strategic, be purposeful, be intentional. That's when you can take advantage of financial institutions. They are smart. But when you are very strategic and you are very purposeful, you can take advantage of it. All these title loan company, I make use of them from time to time. If I need to buy high ticket item like 5,000, 10,000. The other day I wanted to change the AC unit of one of my properties in Tennessee. So I went to one of the title loan company to finance the purchase of the AC unit for seven almost 8,000. They have a promo. They gave me $500 gift card, American Express. Good. I already have the cash before I went to them. So they gave me 3 months before I start paying. I waited up to like 60 days, going to 62 days, and went after I got the gift card. I went and pay off the cash. The manager looked at me. Oh, we don't like people like you. Oh, they don't, because I make money off them legally. You can do that. Same thing with the credit card. Credit card that have 2% or 5% cash back, make use of them. You spend $1,000, you pay it back within 18 days. That means you will be paying with 5% cash back, you'll be paying around $50 back. Somebody is giving you $50 to spend 1,000. That is what it means. But you have to have the money. Don't let it pass the grace period. Otherwise, the interest will go on it. It's like you throw the baby out with bathing water when you don't pay on time. Mortgages is one of the financial segment that drive U.S. economy. We take out loan to buy a property, 200,000. They give us interest rate of 3%, 5%. They give us 15 years or 30 years to pay it back. At the end of the day, when we take our time for 30 years, we might end up paying like 600,000 instead of 200,000. Yes, it's still good for us. It's still a win-win case because the property we bought for 200,000 in 5 years, in 6 years, has increased to 275 or 300,000. By the 15-year when we pay the mortgage off, property skyrocketed to 400 and something thousand. Win-win. They win. They win through the interest. We win through the equity. Sometimes things doesn't go right or things doesn't go properly accordingly. The mortgage crisis in year 2018, no, 2008, 2009, 2010. Am I correct? No. Year 2000, 2009, 2008, 2000, and year 2000 into 2001, 2002, 2003. There were crises. The financial mortgage company got corrupted. A whole lot of mortgages were approved, like adjusted rates were approved. The lender and the agent and the realtor, they collided together. They were focusing on the volume of sales they can make. A whole lot of mortgages were approved for some even illegal alien, people that are not entitled to take out loan mortgage. But because it's adjusted rate, majority of it are adjusted rate, it caused crisis. Because it got to the point that majority of the borrowers, they can no longer pay their mortgage. A whole lot of them walk away from the property. It's a lose-lose case for the lender, for every stakeholder. Then, when you don't pay your mortgage 1 month, 2 months, 3 months, they will try to work with you. After 6 months or 9 months, depending on the policy of the lending company, they will foreclose your property. What do we mean by foreclosure? They take the right of ownership, partial right of ownership away from you, and they resell it in the open market to recover some of the money or some of their losses. Because it's a complete loss for the lending financial institution that lend you money. Because they anticipated that they're going to get this social amount of interest in a particular term, but they couldn't. It's a lose as the borrower is losing, so the lender is losing. So the government, because they will not be able to get the property tax, insurance company, the community, the independent contractors that could have come into the house, do one improvement or the other, or repairs or one or the other. So all these things has multiplier, ripple effects. So foreclosure is not a good thing. Foreclosure is not a good thing. When you see something that is unethical in financial institution or financial environment, especially with the lending company and individual, say something. Because at the end of the day, it affects every one of us. Let's quickly look into bankruptcy. Bankruptcy is when you answer, when either corporate or businesses or corporation, when they answer, I have too much, I can't manage, I'm overwhelmed with this debts that I have. I can no longer meet up, I surrender everything. Bankruptcy is not good. It's not good for individual that file it. It's not good for all the stakeholders. The only a few debt or financial obligations that you cannot discharge through bankruptcy. Student loan is one of them. You can't go away with it. Student loan follow you to everywhere you go. One, taxes. Government, the taxes you owe government. As individual file for bankruptcy, so a corporation can file for bankruptcy. There are three types of bankruptcy: chapter 7, chapter 11, chapter 13. It gives different scenario and different conditions, but none of it is good. None is good. If you have excessive debt, that is the roadmap to bankruptcy, financial crisis, financial tsunami. It can be personal, it can be general, it can be within the corporation. Let's look at tax management, chapter 9. Taxation. The principle and concept of taxation is based on ability to pay. I'm going to repeat that. The concept of taxation is based on ability to pay. The history of taxation actually started from Africa, where everything was very chaotic, and they choose a community leader. Community leader that they choose were exempt from working so that it can attend to their social need and community need. So each of the farmer will contribute certain percentage of their harvest. They will take it to the king. That is how the concept come. Now that the taxation has been modernized, the concept still remain: ability to pay. Because in those days, when a farmer or any community member do not have sufficient harvest, they are exempt to give to contribute to the king. We have this mindset that the rich people should pay more. Yes, the rich people should pay more, depending on the system of tax that we practice. But there are some instances or circumstances that will make someone that earn 1 million not to pay tax, but someone that earn 50,000 have to pay tax. There are scenarios. There's scenario like exception, tax credit, tax deduction. So you cannot, when you hear that people don't, the millionaire, the incumbent president, they will say, oh, he doesn't pay tax, he doesn't pay enough tax. Oh, there are a whole lot of credit and deduction and exception, especially when it comes to corporation, that make him to pay lower tax. So after you understand this concept, do not be part of people that will just say something without validation reasons. The thing that we cannot claim, for example, this individual has a private jet. There are a whole lot of them, rich people, high net worth. We don't have private jets. If I make $50,000, I can claim expenses if I travel to New York that doesn't on personal business. If they travel from Chicago to New York, it costs them something to fly. Even where they park their private jet, it costs them. Even the cigar that they use, they smoke, is it can be claimed as expense, as business expense for some of them, whereas it cannot be claimed. That's a lifestyle to me. That if I buy cigar for my friends that doesn't generate any income, that's my lifestyle. It's not allowed. But if these high net worth people, they travel and they buy Cuba cigar and they smoke and they claim $100,000 as expense, it's allowable. So you cannot compare yourself or level of your income or business activities to others. There are a whole lot of things that they take that make them to pay lower taxes. Be mindful, these are the people that create job. So government make decision, policies that support them so that they can continue, be profitable and create job. Look at Amazon. The time I was doing my MBA 25 years ago, Amazon was just in the business of lending book. They will make textbook to us. After we use it, I think it's $9.99. All those textbook that you buy for $300, $400, they're like $9.99 that time. They will mail it to us. At the end of the semester, we mail it back. That's the business deal. But because Amazon was able to make profit, keep profit, reinvest the capital gain in other business. Today, Amazon Web Services is bigger than that of Comcast, AT&T, Sprint, all those internet carrier combined. AWS is bigger than the combination of all of them today, with huge number of employees. Look at how they are able to, within short period, how they are able to open warehouses every 30-mile radius across the US. That is the advantages of government policy that supports them. Job creation. Job creation. Okay, let's look at progressive and regressive tax. Our tax system in the US is very complex, but as much as it is complex, it gives room for every single taxpayer to claim or to reflect their circumstances within that tax period or tax year. We practice both progressive and regressive tax. Progressive, the more you pay, the more you earn, the more you pay. The more you earn, the more tax, the higher the tax bracket you belong to. That reflects on our income. What we earn on W2. And the tax bracket that we belongs to depend on the amount of money we make and the claim that we fill on our W4 that we give to our employer. Regressive tax. The more money you make, the less tax you pay. Those are capital gain. Those are capital gain. And another example that we make, most of these high net worth, they don't work for anybody. Majority of their income are capital gain that are taxed at a lower rate. So if, for example, incumbent president make 2.6 million or billion in capital gain, that capital gain will be taxed as a lower rate. That someone that makes 5 million regular income might be paying more tax than someone with 2 point something billion. Flat rate. We practice that. Sales tax. That everybody pay according to what we spend. And you go to the supermarket, it busts us in. You buy one item of 1% tax, you pay 1% tax. I buy 10 items of 1% tax, I pay 1% tax multiplied by 10. We cut our coat according to our size. Another type of tax that we pay that is flat, when we pay toll, airport tax, recreational tax that we pay in the city. We renew our driver license every 4 or 5 years. We pay school district tax. In income tax and corporate tax, there are category of taxes that we also known that is also known as self-assessed tax. Self-assessed taxes. SAT. These are taxes that are paid by majority of independent contractor. You know, there are many of them. We have uncles that are independent contractor. They are plumber, they are electrician, they are builders. These self-assessed tax also are paid by the corner store owners. This one business sole proprietors. What we mean by self-assessed tax? They declare what they make to determine what they can pay on taxes. I'm going to repeat that. They declare within that tax period what they made to determine their tax liability, self-assessed tax. Many a time, independent contractor can declare 40,000 instead of 100,000 they make. If they are audited and they are caught, they will pay the penalty. If they are never caught, that's fine. If the color store make $2,000 in a day and declare that you only make $200, but they are auditors, both federal and state auditors, even local authority auditors that go around to check their record, look at their register tape, look at to verify what they assess as their tax liabilities. If you finish your degree and you work with state, local or federal, and you become an auditor, you make a whole lot of money. You travel to places. The only advantage is you will not have time for your family. I used to be one. Taxes. Purposes of taxes. Government tax revenue are used, especially the fund that go to general fund, like income taxes, real estate taxes, SAT, profit and loss. There are a whole lot of taxes, different taxes. But the category of those that go to general funds, they are mainly used to run government. Government use them to run the governance. They pay the salary, they pay health insurance, the benefit, they pay the water bill, electricity, they buy government vehicle, they pay for transportation, all the expenses are paid for. When it comes to real estate tax that fall under the local authority, majority of local authority use that real estate tax to fund the school district. For example, I know of city of Philadelphia. For every $1 they collect on real estate tax, 63 cents out of $1 go to school district to fund both elementary, primary, and secondary school education. Yeah, majority. If you check, if you live in Fort Wayne, you live on any city, check with them. You will see significant portion of the real estate taxes are toward the.
Okay, I found this on the web. For check your significant portion of the real estate.
Don't mind my phone. The phone can be smarter than me sometimes. Significant portion of the real estate tax are used toward to fund the school district education. Pension fund is not part of it. Pension fund are special funds that are used through the treasurer or treasury department to invest in different instruments so that they'll be able to fund the retirement of the employee. When it comes to capital gains, I can't remember everything, but this one is very interesting. When you join a partner, the partnership, whatever amount individual contribute toward the partnership to get interest, that amount you cannot recognize a loss or capital gain. For example, let's assume we are in partnership in this case, and I contribute a piece of land. That piece of land, when I bought it, 25,000. By the time I contributed it to the partnership, the property, the land is about 250,000. I cannot recognize that as a capital gain. The basis of that land is still 25,000 that I could, even though the fair market value is 250, I cannot recognize that of 250 because it's toward the partners. But when it is toward corporation, you can recognize it. There are a whole lot of tiny things that one need to pay attention to. Otherwise, you'll be making mistake. And when you make mistake, now IRS get you, or whether it's an innocent mistake or not, you'll be whipped with interest and penalty. Let's quickly go to insurance. Insurance is very important as a preparation. You've been proactive against things that can happen. There are a whole lot of things that happen that we don't have control over. Let's say, for example, auto insurance. When I drive, I consider myself as the only perfect driver on the road. So I'm very mindful of every other driving or every other moving vehicle around me, thinking they are not perfect. So I'm proactive. One of the incidents that happened recently, I was traveling from Prescott, Arizona to Phoenix, Arizona, which is about 2 hours. All of a sudden, one of the tire of a moving vehicle in my front just roll out, bill. If I wasn't proactive, that tire could have bumped and jump on my windscreen. But I immediately slowed down and moved to the other lane. That its own accident will have affected me as well. But if it happened, what do I have to do? I have insurance. I call them. This is this. If it stop, definitely I can say, oh, you are the cause of the accident. Insurance coverage, whether it's health insurance, auto insurance, life insurance, property insurance, flood insurance, fire insurance, they are very, very, very important. It limits losses. It recover losses, part of the losses. If you remember a plane that American Airlines that flipped over about a couple of weeks ago, that flip over, and everybody came out, nobody injured. the company give each one of them $10,000. That's insurance money to compensate them that they are, even though they got to their destination, but the inconvenience. I was traveling to Europe years back, and one of the hostesses put hot coffee on me. I didn't sue them. They got my information. They made me a check of 2,500. That's insurance money. When you don't insure yourself, your family member, your auto, your health insurance, when things happen, it costs you more. It costs you more. And there are a whole lot of incidents, especially the natural disaster, flood, fire, earthquake, the pandemic, hurricane. When they happen, they cause a whole lot of destruction that our resources at hand might not be sufficient to put us back to normal life. So if you don't have auto insurance, you are driving, that's not too good. You need health insurance. In fact, when it comes to personal finances, the best of insurance you can do for yourself is to leave health now. Because what is the essence of the money that you accumulate? You have all the resources at old age. You are expensing those money on medication, hospitalization. What is the essence of it? So the best of insurance you can do first to live early. Watch what you eat, watch what you drink, exercise. I'm a living testimony of what I'm saying. I used to be like 10 times this size. You know, if you can see my graduation picture at the background, you will see that I'm a very huge man. But I control what I eat, what I drink, and I exercise. Very mindful of my lifestyle. That's one of the best investment you can do. This is where I'm going to be ending